Hello and welcome everyone. I hope you are doing well. If you could write in the chat box, I'm audible to all of you and is my screen clear? Please do confirm these two things, then we can start our formal discussion and welcoming you all to this ACCA TX marathon session for September 22 exam session. All right. So first of all, let me introduce myself. My name is Rana, and I'm ACCA member teaching taxation, the financial reporting, and advanced taxation since last 9 years. And my core areas of teaching are TX and ATX. Furthermore, the agenda for today's discussion is mainly to recall the few areas to have a quick recap, to have a quick recall of the multiple areas of taxation paper, and then thereafter to attempt tax planning questions. So the main agenda is to recap the few areas, then to attempt tax planning questions. And before before moving on towards today's agenda, I want to ask few things from you guys. Have you practiced questions from your kit? Yes or no? Your active participation is highly appreciated. All right, Jody, Aziza, I got your message, and others. Okay, Ahmad, you're doing it. Good enough to know. Okay. So basically, the reason for asking this thing, actually, I want to know that as we are going to start practicing the tax planning questions, so basically the areas which we are attempting these questions, you would be revising your all of the TX areas. I repeat, by attempting these tax planning questions, you will automatically be revising your all of the TX syllabus areas, because whenever we talk about tax planning questions, it's not from any specific area. So the question may come from any topic, anything, like maybe from income tax, maybe from corporation tax, maybe from CGT or IST. So the tax planning questions are not like defined from any specific area. So while attempting this question, automatically all of the TX syllabus contents and the topics are automatically revised. And now we can start moving towards the next slide. So that is basically the agenda for today's session. For example, now please be with me, very important discussions from now till the end of today's session. I hope you have learned many areas, many things, all of the areas like income taxation, the corporation tax, and the other areas in taxation till now. based on all these things, your input is also highly appreciated. For example, you want to start up a business. I'm just creating a scenario. You want to start up a business. For doing a business, you have two options. You can operate that business as a sole proprietor. You can operate that business as a sole trader. The other option for running that business is to run that business by making a company, by registering a company. So you can use either of these two options. You can operate that business as a sole trader. And option two, you can operate the same business via a company. So over here, we are going to discuss the differences between the tax implications between if you are operating as a sole trader, what will happen then, and versus as a company. For taxation matters, what will happen if you do your business as a sole trader and if you do the same business via company? So what will happen? What will be the differences then? We have specified headings to discuss the relevant areas for sole trader and for company. Then thereafter is second heading. Now, please be with me and try to understand these things, because these are not the general discussions. We shall be applying the concepts, these discussions, in the practice questions. Like we have a same first practice question wherein you have to discuss, being a tax advisor, you have to advise your client whether the person should start a business via sole trader or via a company. So how you can discuss, how you can explain all these things, you can discuss all these things when you have detailed knowledge with the tax implications of the sole trader and the tax implications of the company. You cannot discuss these things in absence of the relevant knowledge. So the first heading is with respect to the taxation on profits. By the way, sole trader means if you are running your business as a sole trader, as you are getting income, so that income will be trading income for you. That income for you guys will be trading income. But let's say you are doing the same business by registering a company. So in a company, when the trading profits are calculated, when the trading profits of the company are calculated, then the corporation tax is applicable. And also in the trader business, income taxation is applied. For company on trading profits, corporation tax is applicable. And the first heading now, the taxation on profits. If you are running a business as a sole trader, then trading or basis period. If you recall few things from the trading income of an individual person, when an individual person starts a business or when an individual person sees a business, then basis period rules are applicable in both situations. But in the once the business started, basis period are applied. After that time, current year basis is applicable. It means the trading profits of individual person are to be taxed on CYB or basis period. And basis period to be applied in two scenarios: at time of business start and at time of business cessation. Then thereafter, if you are running a business as a sole trader, you have to make multiple private use adjustment. For example, any amount of expense, any other thing that is allowed or disallowed, you have to make all of these adjustments. For example, if you are living in a building on a first floor and you are operating a shop on the ground floor, and if the electricity bill is there, so you need to divide that what is the private use portion of electricity and which electricity bill is pertaining to the business. So only the business expenses are allowed. So these all adjustments according to private use adjustment is to be made while operating a business as a sole trader. Furthermore, in the calculation of capital allowances, private use adjustments are also required. It means if there is any privately used asset, it is to be kept separately in a different column named as privately used asset, and any capital allowance will be available to the extent of the business use of that asset. Thereafter, for individual persons, for sole traders, personal allowance is there, and personal allowance for this fiscal year 21-22 is an amount of 12570. And then thereafter, any income is taxed at 20%, 40%, or 45% based on the status of taxpayer. Furthermore, if an individual person is running a business as a sole trader, that sole trader person has to make two types of NICs, which are class 2 NIC and class 4 NIC. These two national insurance contributions are paid under when a person is operating a business as a sole trader. But what will be the impact on the taxation on profits if you are running the same business as a company? Now let's discuss about the second column. If you are running a business via a company, we know one thing, that corporation tax is applicable, but the trading profits are calculated after the deduction of salary paid to individual. If any amount is paid to individual person, because you are the owner of business, you are running your business by making a company, you are also the employer or the director of that company. So if any salary paid to you, so that will become a deduction for the company, and remaining profits are to be taxed on chargeable accounting period. For companies, if you remember the concept, for companies, chargeable accounting period could be of less than 12 months, could be of equal to 12 months, but chargeable accounting period cannot be of more than 12 months. So for company, any taxation is to be made according to the 12 months or the less than 12 months. Then thereafter, if you are running a business via making company, no private use adjustment should be made. Like there is no owner, there is no sole proprietor, so no such private use adjustments are required. Same case with the capital allowances. If you are running your business via a company, then there are no privately used assets, there are no privately used asset column in the capital allowances for the company. Company will not be getting any personal allowance, and simply any profits will be directly taxed at 19%. And if you are doing a business via making a company, then no trading NICs are there for a company. But if you are doing the same thing, if you are doing your business as a sole trader, you have to pay NICs. But if you are doing business via a company, then no trading NICs for company. So hopefully you guys are clear with the first heading, and we are differentiating the taxation on profits for the sole trader and for the company. Um, can you please tell, is there any disagreement? Is there any unclarity? You may please ask. And if you guys are okay, do let me know in the chat box so that we can move forward and can start discussing the next heading. But before that, I want your confirmation. What about others? My dears, it's not one-way communication. Your active participation is very important for all of us. If you are okay with all these things, you may tell, and in case of any question query, you may raise your voice. In fact, you can unmute yourself, you can discuss at any point in time where you are not agreeing with anything or not understanding the things. Good to know that you guys are clear with the things discussed in above heading in a comparison for sole trader and for company. Let's discuss the second thing. Now, let's say, very important, my dears, very important. Let's say you are running your business as a sole trader, you are doing business as a sole trader, and now you are wishing to withdraw the funds. Why you are doing business? For earnings amount, for earning the income. And let's say you have like bond all of these tax implication on the sole trader profits. You have paid the taxation on the profits and under sole trader business. Now you are wishing to withdraw the amounts from your business. Withdrawal of funds for sole trader, is there any implication for withdrawing funds from the sole trader business? No tax implication, because all profits have already been assessed to tax. First of all, let's say you earn 100,000 as trading income. For example, you earned 100,000 as trading income. You have paid tax 20, 40, or at 45%. You also paid NICs. From this earned amount, you have paid all these amounts. So the remaining funds, when you will be withdrawing the remaining funds, there would be no such tax implications, because all profits have already assessed on tax on the individual person as trading profits. You have paid the taxation and the NICs, the related tax liabilities from this amount. Now, with respect to the differential, with respect to the remaining amount, if you are withdrawing the such amount, then there would be no tax implications, because you have already made the tax payments. But what will happen? What will happen? How you can withdraw the funds from a company? Very important to understand now. Over here, you were the single owner, you are the sole trader, but now let's assume you are running your business via making a company. Now you are wishing to withdraw the funds. So funds can be withdrawn from a company business in two forms. Let me highlight first, then I will start discussing one by one. If you are wishing to withdraw funds from a company, then you can withdraw any funds from the company in two forms, in either of two forms or in both two forms. You are running your business via making a company. You are operating your business via registering a company. So when you start your business and you registered a company, in the same company, you show yourself as an employee. You treat yourself as a director of the company because you have invested, you are the owner. So you treat yourself as a employee or director. So if you are the employee or director of the same company which you have created yourself, which you have registered by your own self, and now you are serving that company as an employee, so then you would be getting funds from the company in the form of salary or bonus. If funds are withdrawn in the form of salary or bonus to individual, then these are the tax implications. But as you have registered your own company, you are the investor, you are the shareholder, then thereafter, if funds are withdrawn in the form of dividends, because shareholder will get dividend, you being a shareholder would be getting the dividends from company. So if the funds are withdrawn in the form of dividends to individual, then what will happen? So basically, you have registered a company. Now you are wishing to withdraw the funds from the company. You have two options. If you are the employee of that company, you can withdraw funds in the form of salary or bonus. And being investor, being shareholder, you can also withdraw any funds from the business, from the company in the form of dividends. If you are the employee and the company, you are the employee or director of the same company, of your own company, that will be employment income for you, for individual person, and the amount which is given by the company as a salary, that amount is an allowable deduction for the company, because as normally employer pays salary to all of employees, as any amount of salary paid to you as an employee, being an employee, considering you as an employee, so that is an allowable deduction for the company. And as you are getting this income as an employment income from the company, you have to pay class 1 NIC, and this class 1 employee NIC is paid on gross cash earnings. I repeat, class 1 employee and employer, both types of NICs are paid on gross cash earnings. company will also pay class 1 and class 1A NIC in the capacity of employer. Class 1A on the amount of gross cash earning, whereas class 1A on the net taxable benefits amount. Employer also pays class 1A NIC on the net taxable benefit amount, but as a company would be paying these two amounts to you, these will be the allowable deduction from the company profits. So now you have the idea, you have registered your own company, you want to withdraw the funds from your own company. If you are the employer director of the company, you will be getting employment income. Hopefully this thing is clear. Now let's talk about the second scenario. If funds are withdrawn in the form of dividends to individual, then it will be a dividend income for you. Now, being a shareholder, you have extracted funds from your own company in the form of dividends. So as you are getting the amount of dividend, it's actually receipt or cash basis. Furthermore, before the taxation of dividend, there is exemption available of £2,000 for all of the taxpayer, irrespective of the status of taxpayer, whether the person is basic rate taxpayer or a high rate taxpayer or an additional rate taxpayer. Regardless of this fact, dividend income for each individual is exempt. For the first 2,000, dividend income is exempt. Then thereafter, this dividend income will be taxed at these rates: 7.5, 32.5, and or 38.1%. So what will be the tax implications for you if you are withdrawing the funds in the form of dividends? So you have to pay these amounts, the taxation on dividends. By the way, nothing is written here for company. No implications are given here for the company. Can you identify the reason where the shareholder, where the owner of the company is extracting funds, withdrawing funds from the company in the form of dividend? So these are the implications given for that person, but no implications are given for the company. What is the reason why the company area is missing? I'm just giving you 30 seconds to think about it, and would appreciate if you write your answer in the chat box. Thank you. The reason is simple. Any company which paid dividends are paid from post-tax profits. Dividends are paid from post-tax profits. If you are getting the income in the form of dividends, so there are no tax implication for the company, because company normally pays dividend from the post-tax profits, the profits which have already assessed for taxes, and dividends are paid from the retained profits. So that is the reason no implications are given here for the company. Hopefully the first slide is crystal clear. Based on the discussions we had on this first slide, we shall be applying this knowledge while practicing questions, while doing the practice questions. By the way, as the participants who recently joined or joined late, let me guide you the agenda of these marathon sessions. Basically, we shall be recalling the multiple areas of taxation, also practicing few questions from multiple areas and mainly for tax planning. Now we have discussed with this one slide. Furthermore, on the next we have a difference between salary versus dividend. Here we have the difference between salary versus dividend. Think, think if you are getting salary, what are the implications for you as an individual person? If you are doing job anywhere, if you are getting salary from your employer, what are the implications? And if you have invested an amount anywhere in the shares of any company, and from those shares investment, if you are getting any dividend amount, so what are the tax implications for you guys if you are receiving any dividend income? Think, then I will start discussing few points. Before my discussion, all of these headings are in front of you. You can have an idea what will happen if you will be getting salary from your employer, and if you will be getting any dividend from any shares investment. So these implications are in front of you. I'm just giving you 30 seconds time to have a look on this. Then I'm going to start discussion. Okay. By the way, if you are getting salary from your employer, rate of income tax, salary is part of non-saving. When we prepare the income sheet for the individual person, we put the salary as employment income, and salary being part of employment income is a part of non-saving column or other income column. And the rate of relevant rate of taxes for this first column are 20%, 40%, or 45%. Whereas in the income sheet of the individual person, dividends are reported separately, and any dividend income is to be taxed at 7.5, 32.5, or 38.1%. So these are the differences with respect to salary and dividend under the head of rate of income taxes. Thereafter, NIC is paid by individuals. If you are getting salary, you have to pay. Individual must pay. It's not optional. If you are in employment, if you are getting salary and anything, so individual person must pay class 1 NIC on the salary at 12% or 2%. And basically the gross cash earning is important to us, is important for us to calculate, because class 1 employer NIC or class 1 employer NIC is based on the gross cash earning amount, whereas no NIC is payable on the dividends. If you are getting any amount of dividend, so then there are no NICs paid on dividends. As your employer is giving you an amount, as you are the employee of your employer, you are getting salary. So NICs are also paid by the company, by the employer. Employer must pay class 1 NIC at the amount of salary at 13.8%. Note that employment allowance of 4,000 is not available. Normally, we know one thing, that when it comes to NICs paid by employer, there is normally an employment allowance of 4,000 is there, which is deducted from the total employer allowance, which is deducted from the total class 1 employer allowance, which is deducted from the total class 1 employer NIC. This 4,000 employment allowance is deducted, but keep this thing in mind. This 4,000 of employment allowance is not available where the director is a sole employee. Just let me give you example. You started operating a business via making a company. You have registered a company. You have shown yourself as an employee of the company. Why you have shown, why you are why you have in employment, why you are in employment of the company, to extract fund in the form of salary or bonus. At the same time, that company, when paying NIC, so that 4,000 employment allowance will not be available for that company. Why? Because you are the director and the sole employee of the company. This 4,000 employment allowance is not available where the director is a sole employee. Number two, if the company is giving you a dividend, NIC is paid by the company. No NIC is payable on dividends by the companies. Thereafter, as you are getting salary from your employer, so what are the implications for that company which is giving you salary? Corporation tax implications for the company who is giving you salary, and in second column who is giving you dividend. So what are the corporation tax implications for the company who is giving you the salary? The salary is paid to employee and the NSC is paid by the company, are treated as a staff cost, and these are allowed expenses, and these will be deducted from the company's profits. Hence, company profits will go down if the profits are decreasing. So it means reduction in the corporation tax liability. Increase in expense is a decrease in profit. Decrease in profit is a decrease in corporation tax liability. Whenever the allowable expenses are increasing, what's the impact on profit? Profit will go down. If the profits are going down, ultimately the corporation tax will be calculated as a lower figure. But if a company is giving you dividend, corporation tax implication for that company is no tax implications for that company, because dividends are paid from the post-tax profits, from the retained profits. So these have no corporation tax implication for the company who is paying you dividend. Next thing, pension contribution. Salary has a link with pension contribution. Salary has a link with pension contribution. For pension contribution, contribution can be the higher of 3,600 and relevant earnings. Pension contribution is the higher of 3,600. This amount is given by HMRC, and relevant earning is comprised of three things: FHL property income, the trading income, and FHL property income, employment income, and trading income. So over here you can see that this salary has somehow linked with this pension contribution, because pension contribution is the higher of. So you can see that this salary ultimately have a link with pension contribution, because somewhere for finding the relevant earning we need FHL property income, trade income, and employment income. So in salary is part of employment. So that is the reason it is written as salary is earned income and is relevant for the pension tax relief purposes in the relevant earning. When we do check these two amounts for comparison purposes, one of the amount is relevant earnings. So for the calculation of relevant earning, we also need to know about the salary of the person. Whereas if a company is giving you a dividend, that dividend has no link with pension contributions. Dividend are not earned earning and not relevant earning for the pension contribution tax relief. Relevant earning is any income which is earned by doing some efforts. Relevant earning is an earning which is earned by a person by having some efforts, by doing some efforts. Dividends are not earned by doing some efforts. Dividends are earned by making investments. So that is the reason this dividend income has no link. This dividend income has no link with this pension contribution. So basically till now we have discussed two different aspects in taxation for tax planning areas. We started discussion of if you want to start a business as a sole trader or as versus as a company, what will happen then. We discussed this slide in two heads: taxation on profits and the withdrawal of funds. Then we compared about the salary and dividend. If you are getting salary, these are the tax implication under these headings, and if you're getting dividends from any company, these are the tax implications under multiple headings. Now, based on all of these discussion points, it's time to start the very first question, that is question number 1. if you really wish to pass your TX exam, these questions are very, very important for all of us. For all the students who are attempting TX in upcoming session, if you really wish to pass your exam, these questions gonna help you out for passing your TX exam. So basically, in marathon session agenda is to cover around 7 to 8 questions, and we are not just doing practicing questions, but also recalling, recapping the relevant areas and which are normally from the all over taxation matters. So you can see that by discussing these two headings, one of them we compared in income taxes with the corporation taxes and summarize few points quickly. Then thereafter, for salary and dividend, both are part of income taxes, but what are the relevant differences, what are the relevant tax implications we discussed in a short time. Now going to apply this knowledge and can easily attempt this question number 1. For attempting question number 1, you have to think that you are a tax advisor. Think you are a tax advisor and a client comes to you and that person wants to know that how he or she should start a business. What will happen if the person would be starting a business as a sole trader? And what will happen? What will be the tax implications if the same person will start business by registering a company? So the same thing is here in this question. You are required to calculate these three things. Let's start reading the scenario. N is going to commence self-employment from the start date of the fiscal year 21-22. Fiscal year 21-22 starts from 6 April 21. But the person is unsure. That's very important. A person is going to commence self-employment, but is unsure whether to run his business as a sole trader or to trade via a limited company. And the company name will be Amphibian Limited. There is a person whose name is Nuit, want to start a business but unsure whether to start a business as a sole trader or to trade via a limited company, and the company name will be Amphibian Limited. If he will start this business as a company, the company name will be Amphibian Limited. In either case, means in both options, in any of the above options, whether he start business as a sole trader or whether he start business as a limited company, in either case, Ann's tax adjusted trading profits for the year end date standing at this date, and assuming in both cases the tax adjusted trading profits for the year ended 5th April 22 will be 100,000, and this amount of 100,000 is the tax adjusted profit, but before taking account any director remuneration or employer's class 1 NIC if trading via limited company. These things are only to be used. These highlighted things are only to be used when the person would be doing business via a limited company, not in any other situation. This 100,000 amount is the tax adjusted trading profit, but you may need to deduct further things. You may need to consider the further things if the business is operated via a limited company. So then maybe a director remuneration is need to deduct or class 1 employer NIC. So now person wants this thing, whether N should operate as a sole trader. He's asking you whether I should start my business as a sole trader, means self-employment. You have to tell whether person should operate business as a sole trader or via company. Then he is asking further things. If N trades via a limited company, then he is considering three alternative approaches to extracting profits from Amphibian Limited. In all three cases, the company, he will be making a company, he will be registering a company, company name will be Amphibian Limited. And if he operates as a limited company, then he is considering three alternative approaches for extracting profits, for the extraction of profits from the Amphibian Limited, from the company. In first scenario, he is thinking to withdraw funds in the form of director remuneration. This thing from this slide, withdrawal of funds in the form of salary only. Number two, withdrawal of funds in the form of dividends. Limited company, he would be withdrawing funds in the form of director remuneration. Limited company would be taking funds in the form of dividends. And number third, mixed remuneration package. If he trades via company, then he is considering three alternative approaches for extracting the funds from the company. Number one, the entire profits will be withdrawn as director remuneration. Okay, I'm not going to read this one because we'll be reading all these while at time of attempting this one. But now let's talk about the first one. What will be your answer if the person would be trading as a sole trader, as if the person is in self-employment? What will happen then? You have to answer in three aspects: the income tax, the corporation tax, and the NICs. And you can see that in the option one, no corporation tax will be there because he's not going to register the company. But for surely there will be income tax, for surely there will be NICs, because self-employed person, the sole trader, they actually pay two type of NICs. They actually pay class 2 and class 4 NIC. So I'm just giving you 5 minutes time to think what will happen if the person would be doing this business as a sole trader. What are the tax implications then? And would appreciate if you start attempting the question at your own. Believe me, it will be helping you out for passing your TX exam. Please try to attempt this question at your own. I'm giving you 5 to 7 minutes time just to attempt this option one. The scenario is in front of you. In either case, the tax adjusted profit will be 100,000. Considering this amount, you need to talk about income tax and the NICs. Your time starts now. I'm very much hopeful that you have tried. Okay. As the person would be doing business as a sole trader, the tax adjusted trading profits are given as 100,000. This highlighted area is nothing to consider while attempting option 1, because these things may be used when the if trading via a limited company. So I'm not going to use any of these highlighted things for solving option 1. You can see that person would be getting trading income. So trading income is part of non-saving column, or we can also write it as other income. If you prepare income sheet, so the trading income is to be reported in the non-saving column or the other income column. 100,000 is given. No other source of income is available for the person. Same trading income is considered as total income. Furthermore, if you remember the exact format of the income sheet, from the total income, we deduct the qualifying interest. Qualifying interest is an interest which is paid for specific, which is actually interest paid on loan and loan acquired for specified purposes. Qualifying interest is not given, so the net income is calculated. Net income is 100,000. Very important question from you guys. How much personal allowance is available? If you remember, there is a concept of the tapering of personal allowance. If you remember, there is a concept of the tapering of personal allowance. Is the tapering is applicable in this question or not? A simple question, a simple and straight question. Is the tapering of personal allowance is applicable or not? Perfectly answered by few students. It is available in full. Why? Because why personal allowance tapering is not applicable? Because we know one thing, that from the net income in this scenario is 100,000. It's a side working, it's not the part of the answer, but to recall a petty area, net income is 100,000. From the net income, we deduct the personal pension contributions gross amount and gifted donations gross amount. These amounts are also not given. ANI is calculated. ANI is calculated as 100,000. If this ANI is equal or less than a limit of 100,000, if ANI is not more than this amount, then ANI is equal to limit of 100,000, which is given by HMRC, then no tapering of personal allowance. Hopefully this area has now recalled. For example, if ANI is calculated as 110,000, then for surely we will be using a lesser amount of personal allowance. And by the way, there is also an amount if ANI is more than 125,000. If ANI is more than 125,000, then automatically personal allowance will not be available. If it is in between 100,000 and 125, if ANI is in between 100,000 and 125,000, then the personal allowance will be tapered and a lesser amount can be used. But when the ANI is more than the 125,000 amount, personal allowance can be considered directly as nil. After this tapering, if tapering is not applicable, it means we can avail the whole amount of personal allowance of 1 to 570. Thereafter, a taxable income is calculated. A taxable income for the person is calculated as 87,430. Furthermore, we have to tell these things, income tax and the corporation tax and the NICs, but for this part of the question, no corporation tax, but we have to calculate the income tax and NICs. On this taxable income, the first band rate is 37,700. For the first 37,700 from this income, the first 37,700 is taxed at 20%, 7,540 is calculated. The excess amount from the first column, 87,430, minus from this total taxable income, the first 37,700 as tax at basic rate. So a differential of 49730 is going to tax at 40%. Resultingly, 19892 is calculated. The total income tax liability amount is just calculated at 27432, and income tax liability amount is just calculated 27432. Let me write here. If we opt for this option one, the income tax liability will be 27432 plus. The second thing which is going to add here is NIC. For NIC on self-employed persons NICs, they pay NICs of two types, the class 2 and class 4. Class 2 NIC is calculated and paid at a fixed amount of 3.05 per week. And if the business is like he runs business for 52 weeks for whole of the fiscal year, around 159 is calculated as class 2 NIC. Whereas for sole trader person also have to make class 4 NIC. Class 4 NIC for the first 9568. All this information with respect to NIC is given in tax rates and allowances in exam. Don't worry about this thing. For the first 5968, it's nil. Then thereafter, the second range is 50270, of which 9568 has already paid at nil. 40702, it is to be multiplied at 9%, 4884. By the way, a simple question from you. Class 4 NIC is paid on which amount? Class 4 NIC is paid on which amount? On the taxable income, on the trading profits, on which income it is calculated and paid? Can you please tell? No. Both answers are incorrect. It's not on gross cash earning, that is under employment. Gross cash earnings is part of employment. We are talking about self-employment, not on salary again. So basically, class 4 NIC is paid on taxable trading profits, and taxable trading profits in this question are given in the above scenario. For either case, the taxable profits will be 100,000. So this class 4 NIC is paid on taxable trading profits, and we are finding the amounts of the taxable trading profits from 100,000 till now. We have paid an amount of 50270, a differential of 49230. 49230 is calculated at 2%. 995 is calculated. If you sum these figures, 4884. It's not 4884. Let me change this amount. 40702. It's becoming 3663 plus 995. So the total class 4 NIC is calculated as, thank you, 4658. So in case where the person is wishing to run this business as a sole trader, that person has to bear income tax liability and these NICs. So what are the sum for the option 1, where person wants to run a business as a sole trader? So these are the implication, plus 159 plus 4658. The sum of all these is becoming figure is becoming, can you please make it total? 32249. So that's the amount if a person of this option, if he run business as a sole trader, so then the total class 2 NIC, the class 4 NIC, and furthermore the income tax liability, the sum of all these is becoming 32249. Are you done with the discussion of the option 1? Is there any question and clarity? You may please raise your voice. You may please ask. In case of if there is any unclarity, are you guys all okay? What about others, please? I want to know from all of you, not from the few students. We all are here for revision for all of the things. Thank you. Thank you all. Let's talk about the second one. Let's talk about the second one. I'm moving forward. And now the person is wishing if he wants to trade as a company, and when he would be trading as a company, considering 3 alternative approaches for extraction of funds from the company. Number 1, a limited company, and he will be extracting funds in the form of director's remuneration. And as I showed you here, as we have discussed, if the funds are extracted in the form of salary or bonus, it will be considered as employment income for the company, but allowable deduction for the company. Individual person as getting income, salary, has to pay class 1 NIC. For company is paying salary. So company would also be paying the class 1 NIC and the class 1A NIC on the benefits provided. But these are the these two are the allowable deductions for the company. For attempting this part via limited company and extracting fund in the form of remuneration package, these are the relevant areas, these are the relevant discussions to be performed now. Just read these statements, as we'll be following these concepts while attempting this part of the question. The entire profit, the whole profits, the entire profits will be withdrawn as director remuneration. As he registered this company as its own, he is basically the owner, he is the investor. He registered this company and operating via company now, and also an employee of the company, director of the company, and giving the entire profits will be withdrawn as director's remuneration after allowing for employer class 1 NIC of 11080. Amphibian Limited is not entitled to NIC employment allowance. Why this NIC employment allowance is not available for the company, as I have showed you, note that employment allowance of 4,000 is not available where the director is a sole employer. So he registered this company and he is a sole employee of the company. He will be taking the director remuneration after this amount paid by the company as class 1 employer NIC, and also the 4,000 amount of employment allowance will not be available for the company because he is the sole director of the company. So by the way, in both scenarios, tax adjusted trading profits will be 100,000. In either case, if he operates as a sole trader or operates via company, in either case, tax adjusted profit will be 100,000, but this 100,000 is before taking any director remuneration and class 1 employer NIC, where the person is operating via a limited company. So over here you can see that he is operating this business as a company, and from the 100,000, please be with me now, very important discussions. 100,000 is a total taxable profits, of which employer, the company, has to pay 11080 as employer class 1 NIC. So if the company has paid this amount as NIC, what are the differential amount? What is the differential amount? 88920 are the differential profits. For this amount, he is asking that the entire profits will be withdrawn as director remuneration. But what will be those profits? Now it's talking about these profits. Because this amount of profit is calculated after the deduction of class 1 employer NIC, these profits will be withdrawn in the form of salary. So for person, it is considered as salary. Salary is part of other income column or non-saving. As he is getting this amount from the business as a salary, what are the implications for the person? For person, for NUIT, it is considered as employment income, because for NUIT, for the person, if he is taking this amount as salary, salary is part and parcel of the employment income. No other source of income is given for this person. Total is calculated as same 8, 8, 9, 20. From this total, we can deduct qualifying interest, but again, qualifying interest is not given. So the net income is calculated 88920. This net income is deduction of 1257. After deduction of 12570, taxable income for such person is calculated as 76350. Now think, as we have done with the discussion, if he is registering a company will have to bear this amount. So ultimately, in this scenario, what is going to happen? An amount of class 1 employer NIC will be paid. Furthermore, person's income tax liability plus person's NICs will be paid in this scenario if he operates via a company and extracting funds in the form of remuneration package. For this taxation, for this person's taxation, the first 37,700, from this amount, the first 37,700 is taxed at 20%. 7540 is calculated. Take the total amount now, 76,350 minus 37,700, a differential of 40702 is gonna tax at 40%, the high rate of tax. Resultingly, 488. Can you please tell what is the amount calculated? 40702 into 40%, that amounts no. 76350 minus 37,700. $38650. If this 38650 is multiplied with the high rate of tax, what's going to happen now? 15460 is calculated, and the total income tax liability in this scenario will be, the sum of these two is becoming 23,000. When a person have registered a company, doing business via a company and paying himself a salary, but on that salary employer paid this NIC amount, and the remaining profits are actually withdrawn in the form of salary. No profits are there for company, so that is the reason no corporation tax liability. But employer, being employer, company has to pay an amount of NIC, that is 11080 plus. In this amount, person has to pay a salary, an income tax liability of 23,000. Adding all of these things, yes, it will be provided, don't worry. But it's better to have the live session so you can ask your questions in real time. But for surely we'll be giving you the recordings as well. Now the next thing is, as a person is in now employment with the company, if a person is doing job, on employment income, there are certain NICs which are class 1 and class 1A. But as we are talking about employee, the person, so the person has to pay class 1 employee NIC, class 1 employee NIC, and this class 1 employee NIC is based on the gross cash earning. Gross cash earning, let me recall the concept. Gross cash earning is an earning which is in the form of cash or any other taxable benefits which received in the form of cash. So gross cash earning is the sum of two things, the cash earnings, and it's the sum of two things, the cash earnings and those benefits which received in the form of cash. For example, work from home allowance, for example, access relocation, for example, net mileage benefit, for example, overnight stay amounts. So these are the taxable benefits which actually received in the form of cash. So class 1 employee NIC is paid on gross cash earnings and it's paid in the form of bands for the first 9, 5, 6, 8. To the extent of this amount for 9, 5, 6, 8, there is nil NIC, nil. Furthermore, if you remember, as I have shown you, if you are doing business, Umar, I'm actually replying you specifically. If you are in self-employment, self-employed person have to make class 2 and class 4. And if you are doing job, and if you are an employee, employee has to make only class 1 employee NIC. So there's a basic difference. On the above amount, 50270 minus 9568, a differential of 40702. Now the NIC for employee, the percentages are also given in exam. 4884 is calculated. 4884 is calculated. Can you please tell what is the gross cash earning? What is the gross cash earning for this person? How much he received in the form of cash? So that is a total employment income. The entire employment income is directly received in the form of cash because he has given a director remuneration, a salary to himself. So the entire amount of 88920 is basically received in the form of cash. So we can say that 88920 is the gross cash earning in this question. Why we need to calculate this? Because now in the last step of the NIC's calculation, from 88920, if we deduct 50270, a differential of 38650, on this 38650, NICs are paid at 2%, 773. If we add all of these three amounts, then you can see 5657 is calculated. Let me conclude, as he is operating this business via company and paying himself a salary. In this scenario, company being employer is paying class 1 NIC, class 1 employer NIC. That's the cost we added over here. Then the remaining amount received in the form of salary to that person, and nothing is remaining there for the company. So no corporation tax liability. So that is the reason we have no corporation tax liability here. And the entire amount is given to that person as a salary, that is employment income. On getting salary, it is to be reported as other income or non-saving. So there will be income tax liability. We calculated income tax liability and added over here. Then we also talked about, as a person is getting the employment income, on employment income NICs are also paid. So an amount of 5657 of NIC is calculated, and the sum of all these three is 39737. So that is a total 39737. So 39737 will be the total implications if he operates as a limited company and get director remuneration. Then these are the total amounts to be paid. Because Ahmed, why we are also adding this amount over here? Because Let's assume, let's apply this scenario on yourself. If you started a company, at the end of the day, who is the actual owner of the company? You. So as he is operating this business as a company, ultimately, if his company is paying this amount, so that's ultimately his cost. I repeat, for example, if you start a business, if you start a company and your company is paying any cost, so ultimately it's your cost. So in this scenario, we have to think about the company perspective and person perspective as well, because you as a person and the company, that's your company. You are not two different things. So it's your total cost, in fact. Any unclarity, please raise your voice. Are you guys okay? We are done with the discussion of the first scenario in a company situation where the person is operating a limited company and giving him a director remuneration. Let's talk about second. Again, the person is operating this business via a company and paying an amount of dividend. Let's treat this scenario, the entire net of tax profits. Net of tax means after taxes or before taxes. Can you please tell what is the meaning of net of tax profits? What is the meaning of net of tax profits? Is it before tax or after tax? Be quick, please. Yes, perfect answered by Jody Brown. First of all, company would be paying any taxes, then the net of tax amount means after tax amount. The entire after tax profits, the remaining after tax profits will be withdrawn as dividends after allowing for corporation tax. In each scenario, profit will remain same as 100,000. Over here, the person wants to extract funds in the form of dividends, but do a company pay dividend before taxes or after taxes? Answer is simple. First of all, company pay the related taxes, then the remaining amount from the post-tax profits, the dividends are distributed. So first of all, we have to check what is the profit amount. Profit amount in this scenario is given as 100,000. Profit amount in this scenario is given as 100,000. From this profit, corporation tax liability. Corporation tax is always calculated at 19%. It means an amount of 19,000 paid as corporation tax. Net of tax profits. Net of tax profits are becoming, means after tax profits. The after tax profits amount is 81,000. So actually the scenario is mainly for this post tax profits. The entire net of tax profits. So that's the entire net of tax profits amount is becoming 81,000. This amount is withdrawn as dividend now. Think for you being owner, being investor. So this amount is becoming as dividend income for you now. You are extracting this amount as a dividend income. So dividend income in the income sheet is to be kept in the dividends column and it's your dividend income. Let me show you the relevant slide. When you are getting dividend, you have to think all of these things. All of these are applicable if you are getting an amount as dividend. What will happen then if your company has paid a corporation tax, then you have extracted amount in the form of dividend. First of all, for your cost, your company has paid a corporation tax liability of 19,000. Your company has paid a corporation tax of 19,000. You are not separate from your company. You are checking your own cost, the cost of your company, and as well as your cost. So your company has to pay a tax payment of 19,000, the corporation tax liability. After that, you extracted the remaining profits in the form of dividends. What are the implications for you now? Think about yourself now and try to attempt If there is no other source of income is given, if there is no other source of income is given, the same would be considered as total. So just try to complete till here. Just try to complete till here, considering now you got this income as dividend income. So you have 5 minutes time to solve this half of the question. After 5 minutes, I will start my discussion. So your time starts now, and please try to attempt this question. What are the implications for you? You just need to calculate the income tax liability and the related NICs, if any, on the dividend. Okay. In absence of any other income, you are extracting funds fully in the form of dividend. So it is considered as your total dividend income. And total dividend income is 81,000. Again, following the relevant steps, no qualifying interest is available. Then the net income is calculated, 81,000, and that's your net dividend income. From this, we can deduct personal allowance. No tapering is applicable. Once we deduct this personal allowance, taxable income in this scenario is calculated as taxable income in this scenario is calculated as 68430. What are the tax rates to be applied? Please keep this thing in mind. That's only the dividend income which we are going to tax now. First of all, take the dividend exemption. If you remember, first 2,000 of dividend income is exempt for all, irrespective of the status of taxpayer. First 2,000 dividend income is always exempt. Thereafter, the total dividend income is 68430, of which we deducted the exempt amount. Remaining dividend income is 66430. Any one of you can tell me the relevant tax rates? Do you have any idea what will be the tax rates applicable on remaining dividend income of 66430? The relevant dividend rates, let me show you from this slide. Any dividend income is then taxed at 7.5, 32.5, or 38.1%. Any one of you can please tell what is the dividend rate applicable? Should we multiply this with 7.5 or 38.1, 32.5%? Any idea about this thing? Yes or no? Any idea? Okay. Let me guide you an important thing over here. The basic rate band limit is 37,700. This basic rate band limit is firstly covered by the exemption amount. So what is the difference amount available in the basic rate band? So that is 35,700. It means the remaining band limit is available to the extent of 35,700. From this total remaining dividend income of 66430, the first 35,700 is going to tax at different rate, and the differential and the excess amount of 30730, if we deduct from 66430, if we deduct 35,700, so the differential is 30730. That is going to tax at different rate. So the dividend income which is falling in the basic rate band is multiplied at 7.5%, and dividend income which is more than the basic rate band limit, that is to be taxed at 32.5%. So what is the amount calculated? Very right, Salma, your answer is perfectly fine. 35,700 multiplied at 7.5 is giving you 2,6. An amount of 9,987. And total tax liability in this scenario is the sum of these two figures, because the first one is nil, then 2,677 and 9,987. The total income tax liability is becoming 12664. So as we have calculated this amount, furthermore, adding over here, company paid 19,000 as corporation tax liability, and you receive dividends on the dividends amount 12664 is the total tax liability. No NICs, no NICs on dividends received. No NICs on dividends received. So simply ignoring this thing, in this scenario, the total cost is becoming is 31664. So we can write it over here, 31664 will be the total cost for the person if he operates as a limited company and extract funds in the form of dividends. Hopefully all of the things are clear. Now the third and last scenario, it's about the mixed remuneration package. Person is wishing to extract funds in a mixed remuneration package. Read it carefully, and we are trying to attempt the last part of the question, and will pay himself gross salary of 8,000 and the remaining dividends of and a dividend amount of 50,000. Amphibian Limited will make a pension contribution of 10,000 into the company's occupational pension scheme. Normally, companies operates occupational pension scheme (OPC), and the company, the Amphibian Limited, will make a pension contribution of 10,000 into occupational pension scheme on behalf of person, with the balance of the profits remaining undrawn within the company. My question is whether this occupational pension contribution by company on behalf of person is a taxable benefit or an exempt benefit. Can you please tell? What is the tax treatment if a company is paying an occupational pension contribution for the person? Is that a taxable benefit or an exempt benefit? Your answer is highly appreciated. Yes, please. If you remember from the employment income, if employee is contributing himself, that is, if employee is contributing into an occupational pension scheme, that is a deduction from employment income. Whereas if the employer is contributing for that employee, the employer contribution into occupational pension scheme is an exempt benefit. So you can see Amphibian Limited is making a pension contribution of 10,000 on his behalf. So that is an exempt benefit for the person. But for solving this question, few things with respect to company are important to discuss. No, it's not taxable benefit for company. It's allowable deduction for the company. As Amphibian Limited is contributing 10,000 on behalf of person, that is an allowable deduction for the company and exempt benefit for employee. Few things for the company. Company's profits are 100,000 as given in scenario. Company would be paying 8,000 salary to employee, that is allowable deduction. Company would also be making a pension contribution, that is allowable deduction. Remaining profits of the companies are 82,000. On the 82,000 profits amount, if company has to make a corporation tax liability at 19%, so it means corporation tax liability for the company is calculated as 15580. Are you guys okay with this thing? We are considering the implications for company for mixed remuneration package. We are considering few things with respect to company. Company's overall profits are 100,000. Company is paying a salary to employee, that is allowable deduction. Company also making a pension contribution into occupational pension, that is also an allowable deduction for the company. From the total profits, if these are the allowable expenses, the remaining profits are 82,000. The remaining profits are taxed at 19% of the corporation tax rate, and resultingly in this scenario, company would be paying a liability of 15580. It's person's own company, so it will be added over here. If he operates as a company, his company has to make the corporation tax liability of 15580. Then thereafter, let's start the discussion with respect to that person who is extracting fund in the mixed remuneration package. As he is taking a salary from the company, remuneration of 8,000, as well as he is also extracting funds in the form of dividend. So I'm going to create two columns now. One of the column is other column, and second is one for dividend income, and lastly for total income column. We are going to prepare the income sheet of the person. Employment income is given as 8,000, also reported to total column. Furthermore, dividend income is reported to dividend column. He is extracting funds in the form of dividend for 50,000. If we add these two, so the total income is becoming for each column separately 8,000 and then 50,000. In total 58,000. We are preparing this one for income sheet of the person. Qualifying interest is not given, so the same income would be considered as net income. We can deduct a personal allowance. Can we deduct the whole amount of personal allowance from here? Yes or no? Because the first column income is less than the available amount of personal allowance. So to the extent of 8,000 of personal allowance, we deducted from here. Personal allowance total amount is 12570. If from 12570, 8,000 deducted over here, remaining amount of 4570, and in total 12570. So this is how we availed the personal allowance. Thereafter, taxable income, for the first column there is nil taxable income. From 50,000, if 4570 is deducted as personal allowance, remaining taxable income is 45430, and over here 45430. Now finally, what will be the taxation? What will be the taxation? As you can see that there is nil amount available in the first column. There is nil amount available in the first column, so no tax liability for the other income column. Thereafter, let's talk about the second one. As we are going to tax the remaining amount of the second column, which is dividend income. Dividend income exemption is there for all of the taxpayer irrespective of the status. 2,000 dividend income is exempt, so nil. From the total dividend amount of 45430, if 2,000 exempt, remaining amount of dividend is 43430. Again, my question is, which tax rate is multiplied on the remaining dividend amount? Is that a single tax rate or two tax rates? Same kind of working is to open over here. Basic rate band limit is 37,700, of which 2,000 covered by dividend exemption. The remaining band limit in the basic rate band is 35,700. It means from the 43430, the dividend income, to the extent of this 35,700, basic rate of dividend is applicable, that is 7.5, and the excess amount from 43430, if we deduct 35,700, the differential of 7730 is to be multiplied at 32.5%. The related tax liabilities are becoming 2677 and 2512. In this scenario, the total income tax liability is calculated as nil plus 2677 plus 2512 is going to give you 5189. So we can write this amount over here. So we can write this amount over here. Income tax liability in this scenario is becoming 5189. And last point, no NICs. No NICs. Why I'm writing this one over here? Why no NIC? However, you can see that employment income is there, but still no NICs in this situation. Why? Can you please explain? Although employment income is there, for employment income, employee has to pay class 1 NIC, but I'm writing no NICs. Can you please identify why I have written this? No NICs are applicable in this scenario. Any one of you can highlight this thing? Can tell me the reason why we are not actually calculating the NICs? Because for the calculation of class 1 employee NIC, there is nil taxable income, very right, but NICs are paid on gross cash earnings. Class 1 employee NIC is paid on gross cash earnings. So instead of taxable income, your answer should be linked with gross cash earning. Now I can tell you why I have written no NIC, because on the dividend straightforward no NIC. But although employment income is there, but still we are adding as no NIC, because for gross cash earning, the first 9568 of the gross cash earning, there is no NIC. Person is getting only an income, an employment income of 8,000 in the form of cash earning. Gross cash earning in this question, in this part of the question, is no NIC, because in employment income, if we talk about gross cash earning, in this scenario, gross cash earning is only 8,000, which is less than the basic nil band limit of 9568. So that is the reason no class 1 NIC of employee is calculated and paid here. Is this point clear? All of you, please, would appreciate your quick responses. Is this point clear? Why I'm not taking any NIC? And resultingly 20769 is basically calculated. So if person operates via a limited company and extracting funds in a mixed remuneration package, the overall tax liability will be 20769. Writing this over here, 20769. Now you can answer your client. Now you can suggest your client how the person should operate as a business. Option 1 as a sole trader, and in option 2 considering 3 alternatives. Now you can suggest your client that how he operates the how he should operate this business. So what will be your suggestion? You can see, when the person is operating business as a sole trader, 32249 is a total tax liability and NICs. When he is using this option and giving himself a salary, 39737 is a total cost. When the person is operating a limited company and giving himself a dividend, the total cost for the company for himself is 31664. And where the person is operating via a company and giving himself a mixed remuneration package, in that scenario 20769 is calculated. So what is the minimum amount? What is the minimum cost? In which option the cost is less? So you should suggest your client that he should operate this way. He should operate by making a limited company and should be given himself a mixed remuneration package, because in this scenario, as compared to other, 20769 is calculated as the total cost of the person, considering comparing all of these options. So 20769. So we can say that, we can summarize that, if person operates via a limited company and allowed himself a mixed remuneration package, in that scenario it's gonna beneficial for that person. So this is how we can deal with the tax planning questions. Is this thing okay? Is this thing fine? All of you, please. Yes, my dears, is everything clear? Let's take a 5 to 7 minutes break. After that break, we are going to start discussing the question number 2, and it's again from the tax planning area. Tax planning area is not because okay, don't worry Mushi, I'm going to guide you. No class 1 NIC over here, because you can see that employee class 1 NIC is paid on this amount, is calculated and paid on this amount, gross cash earning. My question is, in last scenario, what is gross cash earning? Gross cash earning is an amount which received in the form of cash. And in last scenario, only the salary received in the form of cash. And salary amount is 8,000. This 8,000 amount, this 8,000 salary amount is less than the, because the first 9568 gross cash earning, to this extent there is no NIC, and in this scenario gross cash earning is only 8,000. It's less than the nil rate band for NIC purposes. So this information is basically given in tax rates and allowances of the paper. So you can see that if the amount of salary, if the amount of gross cash earning is less than this amount, so is there any need to pay any NIC? Is this thing clear now? Aristida, is this thing clear now? Good to know it's clear. Okay, let's take a 5 to 7 minutes break. Then we can start attempting the next question. And next question is also going to be very interesting. We have to analyze, we have to compare different situation. It's 43 past 10 at my end. I would be starting right after 7 minutes. I will be starting at 50 past 10. Thank you. It's a 7 minutes break. Welcome back. Here we have question number 2. For this question, you should assume today's date is 20th March 21. Sammy Smith is a director of Smark Limited. One of the students asked, is this question for section C? Yes, we are mainly practicing, we are recalling all of these concepts mainly for section C. Because text planning question is always there for section C in TX exam, and also these are pertaining to multiple areas like income taxation. The corporation tax is also pertaining to other areas. So by attempting this question, what we are actually doing, we are smartly recalling all of the areas of TX syllabus. For this second question, Sammy Smith is a director of Smark Limited. The company has given her the choice of being provided with the leased company car, or alternatively being paid additional director remuneration than privately leasing the same motor car. So what's actually happening over here? Company is considering two alternatives. One of the alternative is to providing the car to employee, and second alternative is to increase the person's salary, the employee's salary. Employee is director of the company, and alternatively increase the salary of the person. So then the employee can arrange him or her transport. In first option, company would be giving car. In second option, company would not be giving car, but will increase the salary of the person. This question has multiple requirements. Like requirement 2, it's question 2. So requirement 2A, requirement 2B, and thereafter requirement 2C. What is the requirement to be? I'm not going to read the scenario first. I would suggest you to read the requirement first. By keeping that requirement in mind, then read the scenario. So you will be having an idea that what to attempt, how to attempt, what is the requirement. If you read requirement at first stage, so then reading scenario would be a fruitful reading for you. It will not be a plain reading then. So always try to read the requirement first. Advise Sammy Smith. This advice is pertaining to the person. Advise Sammy Smith of the income tax and NIC implications. We have to tell two things to individual person, to Sammy Smith. What will be the income tax implication? What will be the NIC implications for the tax year 21-22 if number one, if she is provided with the company motor car, and number two, if she receives additional director remuneration of 28,000. We have to advise Sammy Smith about the implications, tax implications and NIC implication for both scenarios. If she gets company car, what will happen then? And if she gets additional salary, what will happen then? Before reading the scenario, just after the requirement, I can tell you, I can guide you two different things. Let's say you are Sammy Smith. Assume you are Sammy Smith. If under option 1 you get the company car, if company provides you a car, so the car benefit will be calculated. This car benefit is a taxable benefit. It will be added to your employment income. Your employment income will be a higher amount by adding after the addition of this car benefit. So it means you have to pay additional tax because your employment income has now increased by this addition of taxable car benefit. Furthermore, let's talk about NIC because we have to think with from two perspectives. I have told you the tax implications under number 1 and NIC implications under option 1. By the way, car benefit is a benefit. Employee, Sammy Smith is an employee, and employee has nothing to pay as NIC when the employee is getting benefits. Although the employer would be paying class 1A employer NIC, but when a person is getting benefits, so there is no NIC on the benefits received. There is no NIC for employee on the benefits received amount. And let's think on the same lines for second option. In second option, company would be increasing your salary. You are Sammy Smith. If company would be increasing your salary, so you would be receiving an additional remuneration of 28,000. That is cash earning. This cash earning will be added to your employment income. So it will result in a higher income tax liability, because if employment income is increasing, ultimately the tax liability will also go rise. But on the other hand, if you think about NIC in second option, if you are receiving a salary amount, then it is considered as gross cash earning, and you being Sam Smith, you have to pay class 1 NIC as well on the additional amount received, because now it's cash received. Cash received is part of gross cash earning. On gross cash earning, employee has to pay class 1 employee NIC. So these are the things which you should think while reading the scenario, while reading the requirement. So in the first half of the question, in 2A, you have to advise to this person, to Sammy Smith, about the income tax and NIC implication, if he is provided with a company car, or number 2, if he received additional salary. As we have to answer this part in two manners, so I'm going to divide it into two columns. One column for if car received, and second column for if there is increase in salary, if increased salary. We are talking about motor car, if he receives motor car, and number 2, if he receives additional salary. What will happen then? Company motor car. The company motor car will be provided throughout the tax year, and its provision will result in the taxable benefit of 30340 for Sammy. You can see one thing, that directly the taxable benefit is given in scenario. No need to calculate it. Normally the taxable benefit, car benefit, is calculated as cost of car multiplied with the CO2 emission percentage, and then multiplied with the number of months car used in business. But this car is given to employee throughout the tax year, and directly the taxable benefit of 30340 is given in question. The motor car will have a CO2 emission of 200 grams per kilometer and will be leased by Smart Limited, by the company, at an annual leasing cost of 27720. From here till here, nothing to do with the employer, because normally we consider the CO2 emission percentage, but if directly the amount of taxable benefit is given, so why we are considering the CO2 emission percentage? Although it's not company owned car, company would be paying the rent of this car. So for the time being, this 27720, the amount of annual rental paid by the company in respect of this car is not relevant for us, because we are talking about Sammy Smith. We are thinking from the perspective of the person, we are thinking from the perspective of employee. Number 2, we are talking about company motor car. In the second para, the lease payment will cover all of the running cost of the car except of fuel. Smart Limited will not provide Sammy with any fuel for private journey, simply means no fuel benefit is calculated. If no fuel is provided by employer, it means no fuel benefit is calculated. And for option 2, if additional salary, if she receive additional salary, what will happen then? As an alternative to having a company motor car, Sammy, the employee, will be paid additional gross director remuneration of 28,000 during the tax year. She will then privately lease a motor car. If company would be increasing her salary, then it's on her discretion that how she manages her transport. Other information. Sammy's current annual director remuneration is 65,000. Smark Limited prepares account to 5th April. Other information, it's a journal information. So we can use this information anywhere in question where we need it. The current director's remuneration package is 65,000. The current annual director remuneration package is given as 65,000, and company prepares accounts to 5th April. By the way, by looking at this current annual director's remuneration, I can decide one thing, that currently based on the existing remuneration package, based on the current remuneration package, we can say one thing, that by looking at this amount is more than 37,700, the basic rate band limit. If the amount of the person is more than this basic rate band limit, so we can say that person is high rate taxpayer. Are you guys okay with this statement? By looking at the existing remuneration package of 65,000, we can say one thing, that Sammy Smith is high rate taxpayer. Why we can say that? How we can say that? Because the person's salary is more than the basic rate band limit. It means currently the existing status of the person is high rate taxpayer. And that is key point for us. Why it is key point for us? Because in a company motor car situation where a person is getting this amount, getting this car, and this car will result in a taxable benefit of 30340, it means she is already a high rate taxpayer. If an amount of 30340 is added to the employment income, so it means employment income will be increased. So resultingly, due to this amount, tax will increase. But by which amount? High rate taxpayer, they pay their tax at 40%. What is the relevant rate for high rate taxpayers? They pay tax at 40%. It means if an additional amount of 30430 is added to the employment income, so it means on this excess amount, additional 40% tax will be paid. Are you guys okay with this statement? I'm not getting your answers, please. It's my request to please participate in class, how I can say that whether you are getting my points or not. If you are not responding, how I can conclude whether you are getting my points or not? Okay, thank you all. Same goes for second option. If the person would be getting an additional salary of 28,000, already he is paying tax at 40% based on the existing package. If an additional amount of 28,000 is added to employee's salary, it means the tax will also increase by 40%. So this is how we shall be using all of this information in solving the question. If the person would be getting the motor car, Sammy current status is high rate taxpayer, as her existing package of 65,000 is more than the basic rate band limit of BRB limit of 37,700. Second point, if he receives car which will result in taxable benefit of 303440 as per the question scenario. If he receives car which will result in taxable benefit of 30340 will be increasing her employment income as well as income tax liability by, if we do multiply 30340 in with 40%. Why I'm directly considering 40%? Because her existing remuneration package is 65,000 and the current status of taxpayer is 40% high rate taxpayer. If an additional amount of 30340 is added, it means additional tax will be paid at 40%. So 30340 if multiplied with the high rate tax, so she need to pay additional amount of tax of 12136. Third point, no NIC for employee. No NIC for employee because we need to discuss with respect to two aspects, the income tax and NIC. For each case, we are talking about one, the motor car, then we'll be talking about two at the additional salary. Till now, we have discussed all of the things with respect to the income tax. And second, the NIC implication, no NIC for implication on the benefit received. As company would be giving a car, so the car benefit is calculated. Although it will be increasing the income tax liability by 12136, but getting this car will not result in employee NIC. No NIC for employee on the benefit amount. Thereafter, if we compare the same thing over here, if there is an increase in the employer's salary, what will happen then? How much he would be getting an excess amount of 28,000. So this 28,000 will result in increase of income tax liability by 40%. Her income tax liability, okay, the first point is same. Semi-current status is high rate taxpayer and existing package of 65,000 is more than the basic rate band. What will happen if he receives additional salary of 28,000 will result in increasing her employment income. It will result in increasing her employment income as well as income tax liability by how much income tax liability will be increasing? If 28,000 is additional amount, then tax rate is 40%. So the income tax liability will go rise by 11,200. Thereafter, getting additional salary is part of gross cash earning. His existing gross cash earning is 65,000. For the gross cash earning, employee NIC calculation till 50270, NIC for employee is calculated at 12%, but her on above amount, more than this amount, on above amount of this 50270, class 1 employee NIC is paid at 2% based on the existing salary, existing remuneration package. It means the currently employee is paying NIC at 2%. It means if he gets additional salary of 28,000, on this 28,000, class 1 employee NIC will be paid as how we can say that existing salary 65,000, and if we follow the NIC for employee to the extent of 50270, employee pay NIC at 12%, and on the excess amount employer pay NIC at 2%. So currently he is paying NIC at 2% to the extent of existing remuneration. But if he gets additional salary of 28,000 on this excess remuneration, she also has to pay NIC as well at 2%. So the relevant amount is 560. In this scenario, if you look at the total amount, in this scenario, income tax liability increased by 11,200 and also the NIC amount. So the total is becoming 11,200 and 560. So if you go for this option, the total implications for employee is a sum of 11760, whereas if you make the same total, in this scenario only the liability is increasing by 12136 and there is nil implications for NICs. So 12136 is a total cost for employee in this scenario. Are the things clear? Are you guys okay with the things we discussed till now? Yes, my dears, please. So Moshi, where you are facing problems, where you are not clear, please, you may raise your point. Moshi, I'm answering your question, but before that, let me answer to the question raised by other students. Sir, on non-cash benefit, we have to pay class 1A NIC, then why not on motor car? Your argument is right, but for whom we are performing these workings? Umar, we are working in 2A for Sammy Smith for the person. In employment income, class 1A NIC is paid by employer, not by employee. So over here, we are working for Sammy. So that is the reason we simply ignored this thing. Yes, we are working for employee. Sammy Smith is an employee. And whereas motor car is a car benefit, on benefits amount, class 1A NIC for surely is paid, but who will pay that amount? Employer will pay that amount. We are not working here for employer. Moshi, now I'm giving answer of your question. Why skipping NIC? So your question is why skipping NIC? Why we directly multiply 2% with 28,000 with the additional salary? Let me guide you from here. By taking, okay. I'm talking about existing remuneration. Not considering this option right now. Existing remuneration of the person is given as 65,000. Please be with me now and start performing few calculations. Existing remuneration as per the question scenario, he is getting 65,000. Current salary is 65,000. Salary, that's a salary. This 65,000 is a salary. Salary is part of gross cash earning. On this gross cash earning, employee has to pay class 1 NIC, right? How the employee will pay class 1 NIC? These are the bands which are given in exam as well. For the first 9568, there is nil NIC. We are calculating NIC on this gross cash earning based on existing salary. For the first 9568, to this extent 9568, there is nil NIC, nil. The difference is 50270 minus 9568. 40702 into 12%. It is calculated as 4884. Now consider the actual gross cash earning, which is in the question, is 65,000, of which we have discussed, we have covered till 50270. Can you please tell me the difference? 65,000, 50270. The difference is becoming 14730. On this amount, NIC is paid at 2% on the excess amount. If you pay NIC at 2%, so it means 290, around 295 you paid. 295 plus 4884. So that's the NIC, class 1 employee NIC, class 1 employee NIC paid on the existing salary. Now, my question is, if you are getting an additional salary, if you are getting an additional salary, if you are getting an additional salary of 28,000, so will you again availing all these things, or simply your existing salary 65,000 and you are getting additional salary? It means the further NIC would be calculated and paid on the excess amount. Is this thing clear now? Based on your additional salary, you are already having 65,000 salary on which the maximum NIC is calculated at 2%. It means if you are having an further amount, if you are adding further amount in your employment income, so class 1 employee NIC would be paid on the excess amount only, right? Is this thing clear now? For example, instead of this 28,000, if you are getting further 30,000, so then if you are getting 30,000, then we shall be taking 30,000 into 2%, because we have covered the first 65,000. All of you, please, are clear with this statement? Are clear with this concept? So this is how you think smartly while attempting the question in exam. You are currently you are paying NIC based on your existing salary. If you are getting an additional salary, so what will be the impact on the additional amount received? So think like this. Okay, back to this scenario. Other thing, part 2B. Part 2B, now you have to advise the SMARC Limited. In part 2A, you advise the person, you advise the employee. Now part 2B is asking you to advise SMARC Limited of the corporation tax and NIC implications for the year ended 5th April 22. If the company, number 1, provides a Sam Smith with the car, and number 2, instead of car, if company increases the salary of the person, what will happen then? Now you have to think from the perspective of the company. I'm giving you few minutes time to think what are the implications for the company in both scenarios. What are the scenarios? If company provides providing car, what will happen for company? If company increasing salary, now you have to think these two from the perspective of the company. Think. And while thinking, just do consider these two notes. You should assume that 19% rate of corporation tax for the financial year continues to apply. You should ignore VAT and NSC employment allowance here. Okay, think. Okay. As the company is providing car will result in increase of employers class 1 A NIC, because employer has to pay. Very right, Umar. How the class 1 A NIC is calculated? Benefit amount is given in question as 30340. I'm taking this from the scenario because it is mentioned that if the employer will be providing car, it will result in an taxable benefit of 30340, and class 1 employer NIC is calculated at 13.8% directly. So if the company would be providing cars, so company has to bear this amount. Furthermore, if you remember from the trading profits rule, if you remember from the trading income rules, now this statement is relevant for us. CO2 emission of the car is 200 grams and annual leasing cost is 27720. If you remember a rule which you study in the trading income, while deducting expenses which are allowed, which are disallowed for the company, any one of you, it's my question from all of you, do you remember the rule? When the company is paying rent of lease car, will that amount of rent is allowed expense? Yes or no? And if yes, to which extent it is allowed? Is it has any link with the CO2 emission of the car or not? Any one of you, open challenge. Remember the rule? Okay, I guess you have, all of you have forget about this thing. Don't worry, let me recall. In trading income, as we are thinking from the perspective of the company in the trading profits, whenever there is car CO2 emission, when it's from the trading income rules. In trading income, when car's CO2 emission is more than 50 grams per kilometer, in that scenario, 15% of lease rental disallowed. And 85% of lease rental will be allowed. So this thing is to be linked here. Now you can see, to solve, to pass TX, to which extent you have to think. As you can see, this car's CO2 emission is 200 gram per kilometer. It's more than 50 grams. It means the total leasing cost, this leasing cost is not allowed in full. This leasing cost is allowed to the extent of 85% allowed. If an amount of 85% is allowed, so can you please tell 27720? 23562 is an allowed expense. For the company, as we are talking with respect to the company, providing car will result in an allowed expense of 23562, 85% of lease cost, 85% of lease rental is allowed then. Furthermore, as we have studied a point, when the employer is providing you the salary, what are the corporation tax implications for that company? The salary paid or the NIC paid are the staff allowed, and these will reduce the amounts of the profits, so resultingly reduction in the corporation tax liability. As we are talking about from the perspective of company, can you now please tell me the total allowed expense for company? Total allowed expenses for company. So total allowed expense for company, both are the allowed expense, 4187 and 23562. 4187 NIC paid by the company's allowed expense plus the leasing cost 23562 is also an allowed expense. So the total allowed expenses are by the company are 27749. Furthermore, if an expense is increasing, as an expense is increasing, profit will decrease. So ultimately the corporation tax liability will go down. How the corporation tax liability will go down? If expenses are increasing by 27749, so there is corporation tax liability would be saved. Corporation tax liability would be saved by 27749 into 19%. 27749 into 19%. So corporation tax liability will be saved by 5272. Why it's being saved? Because as expenses are increasing, profit will go down. If profits are decreasing, corporation tax liability will go down. So the total allowable expenses in this scenario are 27749. So ultimately, the corporation tax liability will be saved by 5272. Is this thing clear? All of you, please. So till now, we have discussed the first scenario for the company in respect of providing car to employee. But what will happen if the company would be paying the increased salary? Paying additional salary will result in, as it's a gross cash earning now, will result in increase of employer. Which NIC is now being affected? Will result in increase of employer class 1 NIC, as salary is gross cash earning, and class 1 employer NIC is directly calculated at 28,000. I'm directly taking 13.8% because for the first, to some extent it is exempt, no NIC, but based on existing salary, employer has already been paid class 1 employer NIC on the additional amount increase. So there is an additional NIC of 3864, but any type of NIC which is paid by employer is a deduction for the company. Furthermore, paying salary is an allowed expense, for company, and total amount of expense is 28,000. In this scenario, total allowed expense for company, total allowed expenses for company are the sum of 3864 plus 28,000. The total allowed expenses are 31864 now, And same statement I'm going to pass here. If the expenses are increasing, profit will go down. Ultimately, a reduction in corporation tax liability will be there. Finally, calculating how much tax will be saved. If the total allowable expenses are 31864 now, so the corporation tax liability would be saved by 31864 into 19% is the corporation tax rate. If the expenses are increasing by this amount, so income tax, so corporation tax liability will be saved by 19%. So 6054 is the corporation tax liability saved. Over here 5272 is the corporation tax liability saved. Is this thing clear? The second half of this question, is that clear? Because if that is crystal clear, then we can easily move towards the next part. And the next part is pertaining to part 2b of the question. Part 2c is pertaining to the previous part. So if you have any question, unclarity, so please be clear with that first. Now then we can move forward. Waiting for your answers. Okay, moving forward, part 2c, determine which of the two alternatives is most beneficial from the point of view of the company. The requirement may be asked with respect to employee, but if it is with respect to employee, then you can compare these two values. What will be beneficial for employee? Getting company motor car or getting an increased salary. So you can see that getting increased salary for employee for Sammy Smith results in 11,760 income tax and NIC. Over here, if she gets motor car, then the total amount is becoming 12136. So this option, getting additional salary, is beneficial for Sammy Smith. But in this scenario, the question is not asking for the beneficial option for employee, but determine which of the two alternative is the most beneficial from the point of view of Smart Limited. So we have to answer this part keeping the things with respect to the company. So we can say that if company car provided, what will happen then? If company increasing salary, providing increased salary, what will happen then for company, for Smart Limited? By the way, as the company would be providing car, the car will be a rental car. Company has to pay rent of car. What is the actual outflow? That is given in question 27720. I'm getting this amount from the question. If company would be providing car, annual cost will be 27720. That's the actual outflow for the company. If company is providing car, company has to bear the rent of car. That's actual amount, that's actual cash flow. Do not consider any 85 and 15 disallowed and allowed over here, because that's the actual outflow. We are talking about the best alternative for the company. Furthermore, company has to bear class 1 employer NIC. Company has to bear class 1 employer NIC, and class 1 employer NIC has just calculated above an amount of 4187. Company has to make class 1 employer NIC on behalf of employee. Furthermore, if company is providing car, ultimately these two are the allowed expenses for the company. if the allowed expenses are there, so ultimately it will result in the reduction in the corporation tax liability. So reduction in corporation tax liability is by 5272 in this scenario. So overall cost, we are actually basically we are taking the cost and benefit analysis. Cost benefit analysis says that consider the actual cash outflows and also do consider any benefits, any amount saved. So you can see that actual outflow is the rent of car, actual outflow the class 1 employer NIC paid to HMRC, but in this scenario there is ultimately reduction in the corporation tax liability. So reduction in corporation tax liability, CTL saved by 5272, and result is the net cost for company under this alternative is 26635. Same goes for second option. If company providing the additional salary, if company providing the increased salary, company have to make cash outflow, salary paid, the actual amount of salary paid, the additional salary, company has to make an amount of 28,000. In this scenario, again take the class 1 employer NIC and employer NIC, class 1 employer NIC in this situation is 3864. Thereafter, in this scenario, there is reduction in corporation tax liability, and corporation tax liability saved in this scenario is by 6054. Corporation tax liability saved in this scenario by 6054. So ultimately you can see that net cost in the second alternative is becoming 25810. SMARC Limited, can you please suggest SMARC Limited should go for alternative 1 or alternative 2? Which one is better? You can see, you can compare the net cost. You can compare the net cost for the company in each alternative. Net cost in alternative 1 is 26635 and net cost in alternative 2 is 25810. Now you can suggest that for SMARC Limited, alternative 2 is best because it's giving you a lower amount of net cost. Is this thing clear? Okay, I'm not going to start third question right now. Rather, we shall be doing this question and further questions from in today's session. In tomorrow's session, we shall be covering the other questions as well. Don't worry, but now you have clear idea that which type of questions are examined in paper and to which extent you have to think before answering the question. It's not that easy as you are thinking, and I would request you to please keep revising all these things before coming in tomorrow's session. Please keep revising all these things, so that's gonna help you out in tomorrow's session. And before wrapping up today's session, if you have any question, any query, the things which we covered today, if you have any question, any unclarity, you may please ask. I have same, because basically these are the tax planning areas, and tax planning area normally covers all of the topics. +923223787312 is my number. You can ask any question here. Furthermore, you would also be added to a WhatsApp group. Don't worry, our admin team will be adding you tomorrow. But in case of any question query, you may get in touch with me. 92322378731 is my number. Furthermore, our admin team will be adding you to the WhatsApp group, wherein this file, the video recording, and the related stuff will be shared. And Umar, for your question, we have multiple questions like question 3 from married couple tax planning, Thereafter, question number 4 is with respect to CGT and IST comparison, and question 5 with the investment alternatives. We have multiple things to cover, and by attempting these questions, all of the areas will be recalled automatically. Yes, my dears. Any question? Yes, I would be sharing all the things. Don't worry. Okay, thank you all. Thank you for your time as you joined the session. Thank you, and see you tomorrow. I would suggest you to ask your friends to join tomorrow's session because it's gonna help you out. You are welcome, my dears. Take care and stay blessed. Take care. Thank you all.